when energy spikes, that can seep into everything else, unlike what happens with everything else. It doesn't sort of go the other way. So copper's got its own dynamics, right? And you know, depending on wheat or soybean or corn, they all have their individual dynamics depending on supply and the growing season. So how do you say it? Just you can't say something that just applies to all the different commodities, can you, Francisco, unless it's energy?
Hey, Joe. No, you can't. I mean, I think what we've been seeing generally is a deceleration in demand because global GDP is slowing down. U.S., European GDP is slowing down very sharply, particularly in Europe, as I said. But also you've had demand rolling down. So it's been a bit of a rat race, a tug of war, if you like, between slowing demand and limited supply availability. And the worst part of it all has really hit, I think, the European economy because of what's going on with Ukraine and Russian energy supplies. Remember, even though oil's traded below $100 a barrel, we still have Europe paying close to $100 a barrel of oil equivalent for thermal coal at the moment, and we are seeing natural gas between $250 and $300 a barrel of oil equivalent across the continent as well. So the gas and power crisis is not over, and this is percolating into lower aluminum production, lower steel production. The problem right now is that demand is decelerating on top of that. So like I said, it's a bit of a rat race, a tug of war to a downside between demand and supply at the moment.
So you have to have a really good feel for what's going to happen in Europe to the energy complex. To really make forecasts for other commodities and for overall global inflation.
I think so, and if you look at what's ahead of us in the next 6 months, it's a difficult, very challenging time for the European economy because. Again, heading into winter, we could find severe gas shortages, natural gas shortages that cannot be filled with U.S. liquid gas. There's simply not enough U.S. liquid gas out there to make up for the potential loss of Russian gas. And I think Putin knows that. So he's I think, pressing his case very hard via the energy complex on the European economy. So we'll see how that turns out. But we know Russia's actually historically had its biggest leverage during the winter time, not in the middle of the summer. So to me, that's kind of the if you like, the main issue hanging over the European economy and the global markets is how does Russia play its cards in terms of Ukraine. Yeah.
I guess what I'm getting to is, with all that in mind, why should the U.S. Federal Reserve kill the U.S. economy to deal with something that's beyond their control and happening, an ocean away? So we're importing all that inflation. Why should we take the tool and think that we need to slow demand in this country and raise unemployment levels based on something that's happening over there? Or can they maybe not go as far as what we thought and maybe orchestrate a soft landing here?
Look, I'm generally still positive on the U.S. economy when I look at the commodity complex. Remember, the U.S. is the biggest commodity producer in the world, much bigger than Russia. And the U.S. is now a net energy exporter as well in terms of petroleum products and liquid natural gas. And now the U.S. is going to be exporting a lot of thermal coal that Europe needs because it's not buying Russian coal as it used to. So I think the U.S. It's in a pretty good spot. Now the issue is, of course, the labor market. The labor market's overheated in the U.S. Yeah. But I do think there's going to be a bit of a change there as well, given the big pullback we've seen in issuance across equity and debt. And also, I think it's just generally less capital availability. So companies with the stock market crash we've seen are going to be hiring less. So I think the U.S. is already onto a soft landing. We'll see if it ends up being soft or hard. But I think the U.S. is in a better position, definitely, than the rest of the world. So I'm a bit less worried. And I think the pullback in commodity prices is really welcome news for the Fed. And as is the strength of the U.S. dollar, which, as you know now, it's breaking 20-year highs against the euro, which, again, I think will also help moderate inflation in America.